Hey everybody, hope you've been doing well. Thanks for tuning in today. Today we're going to go over my investment philosophy, how I approach investments, specifically in the stock and bond market, and just my thought process on making those decisions. But first, let's just take a quick glance at the human investor portfolio on M1 Finance. You can see here, since last time, I've not made any additional deposits. You can see here under our slices we've got our indexes and stock picks. Right now our stock picks are edging out the indexes. It really doesn't mean too much over the short period of time we've been doing this. Before we dive into today's topic, just wanted to mention I do have a affiliate link in the description for M1 Finance. Right now this gets you $30 when you sign up. No cost to you at all, just an extra bonus for signing up if this is a platform you want to try. It helps me and encourages me to continue to go down this experiment with M1 Finance. Alright, let's talk investment philosophy. So when I'm looking to make investment in the stock market, the first thing in my mind, I would imagine most people would be thinking about how big of a risk is this? What category does this investment fit into? So here's just a few examples: low risk, medium high risk, and straight up high risk investments. These are just, as a reminder, these are just my opinions. This is never investment advice, but this is just me explaining how I am making investment decisions. So on the low risk, obviously cash is probably the most predictable thing. It's going to lose money to inflation over time. Bonds are also fairly predictable in their return. Over time, they're returning quite a bit less than stocks. Now, medium risk, I put index funds here. I mean, that is, when you're in, I'm referring to stock index funds, broad-based, so like market cap weighted, such as the S&P or a total stock market fund. And then medium high risk, I'm saying low to mid cap stocks here. So obviously when you're picking up newer companies that have a low market cap, you're typically going to have much bigger swings in the share price. So this is really going to test what you can stomach as far as a loss. And then at the high end of the risk spectrum here, I have IPOs and SPAC, which do go hand in hand. SPACs are kind of a new thing that are becoming very, very popular in the last year or so. Seems like you can read about one or two SPACs coming up out of nowhere every day. And what SPACs are is just blank check companies. So their sole purpose is to raise money and then to hopefully IPO into a company that's actually offering a good or service. Now this is just another way to, I guess you would call it, the kind of the outlook on your investment decisions. So, for me, an index fund is going to make up the default bulk of in my investing, and that's just to continue to contribute to that until retirement, and then it's going to provide me something I can withdraw from. It's a strong conviction for me. No matter what the market's going to do, I'm going to stay the course, and whatever happens there. If we jump over to low cap stocks, this is going to be a guessing game, and you hope for fast growth, and I'm not going to have nearly as big of a conviction for what this company is going to turn into, and therefore I'm not going to be putting huge amounts of money into these versus index fund. And you could say similar for some of even the medium cap companies, but if I'm buying into a medium or large cap company, I'm really hoping to stick with those companies for the long term, unless quite a bit of the fundamentals and the direction of the company has changed from what I initially from the time I initially invested in them. And then, the SPAC and IPO side of things, obviously, my timeline is going to be variable. These companies can quickly turn sour or turn great, and depending on what my individual goal is for that particular IPO or SPAC, it may be a quick exit, or it may be a long-term hold for those companies. It's just going to be very much a case-by-case basis, and the conviction on these, compared to my core index fund investing, is going to be on the low end of the spectrum. And the last thing I like to think about is just the target allocation, big picture, not just, M1 finance. I'm thinking, if you're a W-2 earner, what do you want your risk profile to be? What are your long-term goals? Mix all that together. What is your target allocation? And that can change over time. If you are a young person, most young people are pretty aggressive in their stock allocation. They look at bonds, and what do they need that for? They don't need to soften the hit of the waves in a wild market. But if you've been in the workforce for 30 years and you've got a bit of a nest egg, you're probably going to want to protect that and be able to sleep at night. And a bond allocation that's larger is a good safety net for wealth preservation. And then some people get into real estate. That's not me yet, so that is not my expertise, so we're not going to really touch on that. And then, personally, I like to keep my stock picks pretty low in terms of overall portfolio. And then cash, this is going to depend on a lot of things, but it's basically a comfort level for emergencies or for investment opportunities you may be holding out for. Some people prefer to stay nearly totally invested. Some people prefer a large cash cushion. And this is no right or wrong answer, and certainly what I have here is not investment advice. This is just a quick example on what may be considered a well-balanced portfolio or not, depending on where you are in your life. So in the world of stocks that just seem to only go one direction, up, for the last 10 years, I just wanted to drive home a point here that I want to make sure I don't downplay, and that's just the risk versus reward in the stock versus bond market, especially for people that are, have been in the market, maybe 10 years, that only know a market to go up. And it's so easy to think that, just like this highlighted piece I have here, according to CNN Money, large stocks on the average have returned 10% per year since 1926 versus 5 to 6% return for long-term government bonds. So, if you can get double the return over the long haul, why would you even invest in bonds? Just stocks all the way. And, that's a valid point. But are you going to be able to stomach a time where, there's no growth or little growth? I was looking at this article on thebalance.com, just picking out different time frames for the market. And this middle one here says the S&P 500 index, shown in bright red, delivered its worst 10-year return of negative 3% a year over the 10 years ending in February 2009. I just really wonder if everyone would be as enthusiastic, just 1 or 2 years into a timeline like that. Could you stay the course? Could you hold on to your stocks? Would you sell out? And that's the point I'm trying to drive home a little bit here, is you need to know yourself and pick a investment plan that's going to work long term for you, allow you to sleep at night, and allow you to have confidence in what you're doing. So that's all I've got today. A pretty short one, but one that I just wanted to share, just my thoughts on how I view investments. Just because I invest in index funds doesn't mean that's the only thing I do. But I'm doing a little bit across the full spectrum, whether it's an IPO, a SPAC, some dividend growth company that's boring, for lack of better terms. But I'm dabbling in all of these things with my long-term investment goals in mind. Something that I'm going to be able to sleep well at night with the decisions I've made, as well as 10, 20 years down the road, I'm not going to, hopefully not going to be regretting decisions, or at least know that I made them with the best information I could acquire, and that they were sound decisions at the time, and I just didn't Wall Street bets YOLO all my money away. So that's all I've got for you guys today. Like I said, if you are interested in M1 Finance, sign up for an account with the link in the description. Get $30. I know that offer could change over time. That's what it is at the time of this recording. Let me know what you guys think. Appreciate your time watching this. Subscribe if you would like. Catch you again next time. Thanks.